Hi everyone, welcome back. So this is a quick clip that we're going to get into that was from a previous video. But as always, not financial advice, for entertainment only. Do your own research and invest in following coins and companies. And let's get into the clip. Next one is Digihost. So they announced 2022 year-end financial results and provide operational updates. So let's go through this really quick. And here are the details. Michael Amar, chairman and CEO of Digihost, commented, "We are very pleased to report that despite a challenging economy, the company has reported a positive earnings per share for 2022. This is actually pretty exciting because I think they are the only ones so far that I have seen provide positive earnings per share for 2022. Everybody else has been negative. So this might be one of those things where they might stand out a little bit because they are positive. During the past year, we acquired and successfully completed the build-out of our new mining facility in Alabama, worked to optimize existing operations and improve our financial flexibility by significantly reducing debt on our balance sheet, which is good. And then with the company's recently completed acquisition of the 60-megawatt power plant in North Tonawanda, New York, Digihost is well positioned to substantially increase its hashing power in 2023, which would be good as well because they are kind of small right now. But they're kind of like, the way you could look at them is like that. Remember that tortoise, those cartoons where the tortoise and you had the rabbit, right? The tortoise would just slowly do the marathon or the race and somehow finish out first at the end, right? So that's kind of how these guys are kind of performing as well. They're slow to grow, but they are very financially healthy, if you want to put it that way. Okay. Highlights for the year ended December 31st, fiscal year 2022 are as follows. So revenue of $24.19 million, but the company's mining operations producing 60% more Bitcoin than in the prior, so that's good. Net income of $4.33 million or 0.16, so 16 cents per share, which compared to a net loss of $3.13 million or negative 14 cents per share for the year ended December 31st, 2021, which was actually kind of surprising as Bitcoin was really pumping at that time. So they were actually profitable in a bear market, not profitable in a bull market, which is kind of interesting. EBITDA of $13.74 million, an increase of 394% over 2021. Total assets of $52.6 million, cash and cash equivalents of $4.65 million. Property and equipment, miners, equipment, everything else was $41.81 million. Working capital of $2.87 million. Total liabilities of $5.42 million as of the end of the year, decrease of 87% over the previous year. So that was good. And then basic and diluted net income of 16 cents, an increase of 214 compared to December of last year of 2021. And then you got the numbers here. We'll take a look at the numbers that I have for them. I do have some questions for you guys. Maybe you guys can help me out with this. Let's see here. Where's Digihost? Digihost right here. So when we get into their numbers, financial numbers, there I have, I think, one or two questions. Something's not adding up for me at least. Okay, maybe you guys can help me out. So shares outstanding 28.7 million, market cap 43 million, which is pretty good for them, being that they are only at right now 753 petahash, and then future hash rate is going to be about 1.1 currently, but they are going to be growing to possibly over 2 exahash, which would be good. Okay, so here's the numbers that we do have for them. We'll get into my metrics here in a little bit, but assets, let's take a look at this here really quick. So assets have been falling down here throughout the year. They started at 8.1 million. They finished out the year with 1.8 million. Digital currencies, same thing. They had almost 40 million in digital currencies at the beginning of the year. Now we're at 2.8 million, right? It's kind of the trend that we're seeing here with all of these guys. Digital currencies call options, this was included in the fiscal year 2022. Amounts receivable and prepaid expenses has also come down here to 1.2. Kind of peaked a little bit here in Q2, it looks like, but Q4 has 1.2 million. Income tax receivables, pretty much the same here across the board, it looks like, for the last couple months or couple quarters. Total current assets is 6.1 million, so definitely a big decrease here from the 50.2 million that they had. And property and equipment has actually come down a little bit here to 41.8 million from a peak of 50 million in the beginning of the year. Rights of use was 2.5, so that's pretty close to where it's been previously. Promissory note receivables stayed the same. Intangible asset 1.34, pretty close to where it's been before. Goodwill, no goodwill reported. Deferred tax, nothing reported here. And then total assets, it was 52.6 million roughly, almost half of where they were at the beginning of the year at 106 million. Okay. Current liabilities, this is actually pretty good here. So they are accounts payable and accrued liabilities was 2.3 at the end of the quarter compared to 2.0. So this one actually went up here. Amount going to Northern Data New York has decreased to 322,000 from 1.3 million. So that's good there. Lease liabilities was 99. That's an increase a little bit over there. Mortgage payable was 488. So a little bit of an increase over Q3. And then what else do we have here? I think that's it. Yep, that we covered here. Pre-funded warrants was 0. Loans payable was 0. So they were total current liabilities at the beginning of the year was 14.8 million. At the end of the year was 13.2. So nice decrease there. So that was great to see. Other liabilities. So deposits payable went up here to 511,000 from 138. Lease liabilities kind of went down a little bit to 447 from 42. Mortgage payable also decreased to 389 from 534. So that's good there. And then warrant liabilities went down to 821,000 from 2.5 million. So that's good there. So total liabilities was 5.4 million compared to 17.7 million. So a 66% reduction basically in that. So that was really good for them. Let's see here. Total stockholder equity came in at 52. So that is lower from the 97 million. And let's take a look at the revenues here really quick. So revenues, and this is where things get a little tricky for me. So revenue for them was 24.1 million for the year. Looks like they came in at 5.682 for the quarter. 5.682, let's see here if I came close to that 5.682. Can't remember if I updated this or not. Oh, I was way off here, looks like. They said 5.682. Not sure what happened there. Let's see here. Paste for my results. They said 5.82. For some reason, I just can't dial in Digihost as far as what their production is. I'm down 38% on them for them. So let's update the numbers here based on what they reported. And then things will kind of improve here a little bit for them as well. But I had them at 3.5. Potentially, let's see where we went wrong here. 56, 64, 99. I mean, that's all the same here. Not sure if they're including something else in there as well that is not being reported, which could be the case. Okay, so the other question that I do have for you guys here is this one. So when I looked back at Q3 results, which there's a link here in my spreadsheets, and this was showing me that these three numbers matched up perfectly. So the Q1, Q2, and Q3 numbers matched up to the Q3 results that they provided for the 9-month running, which was at 5.35 million in power costs. Now at the end of Q4, or for the full year, they reported 14.5 million for power cost of power. That, for some reason, if that's the case, they had to spend a heck of a lot of money in the fourth quarter to pay power costs, which doesn't really make much sense. Don't know if they made a mistake. Don't know if I have a mistake someplace. If you guys have any other thoughts on this, or if you know something better than I do, please let me know, because that's driving me a little crazy here. I couldn't figure out exactly what was going on here with this one, because this actually does affect some of my metrics up top. So I want to get this right. Okay. Other production costs as well was 3.2 million for the year, 1 million for the quarter, which is about the same as in Q3. And then they had depreciation and amortization was 3.8 for the quarter, and for the year was 10.7. So that has gone up a little bit here as well. Let's see your minor lease agreements. This is another one that's kind of funky as well. This is based on this. It should be 6.3 million for the 3 quarters, and then they reported 2.5 million. Not sure what's going on there as far as why we are down negative 3.86 million for minor lease agreements. Not sure what's going on there on that one. Okay, let's see here. So gross profit showed up as negative 4.4 million. Cost of revenue was 10.1 million for the quarter, and gross profit margin was negative 78%. And then we got a gross profit minus depreciation was negative 61%, and that's based on because we're getting that power cost of 9 million, which is throwing my numbers off. Okay, so like I said, if you know anything, I'd love to hear it. Office administration as well is down to 784,000, or actually up from 680,000 to 784,000, but still not as bad as it was in Q2. So that's okay. Professional fees was up also from Q3 to 415. And let's see here, regulatory fees was actually down here, so that's good. Gain on sale of property, so that was reported as 1.4 million. They reported this in Q1 of 2.3 million. So I don't know if they had to write off some stuff here, 1.2 million possibly. In Q4, on that one, loss on settlement of debt was a negative 284, which was in prior quarters. What else do we have here? Foreign exchange gains was down, which was also kind of weird here, but it was down in Q1 as well, so we'll leave it. Loss on sale of digital currencies was 11.5 million for the year. Looks like it was nothing for the fourth quarter. Loss in digital currency option calls was negative 1.9 million. That was a new one that came in. Other income was down 218. They provided negative 50. Not sure why it's coming up as a negative 50, but that's what they reported. Change in fair value of amount owing for minor lease agreement, 1.15 million. I wonder if that's why the number up there is weird. I don't know. If you guys know, like I said, please let me know. Share-based compensation was kind of in line where it's been so far this year. I mean, they're averaging about 700 some, 800,000 a quarter, which is okay. It's not great, but it's okay for them. And then let's see what else do we have here that kind of stood out. Loss in revaluation of digital currencies was 1.8 million. That was a plus for them for the fourth quarter, which was good. So income loss before income tax was negative 26 million. And then when we look at all the stuff here, net loss was negative 26 million for the quarter, but they were up 4.3 million. And that's based on the help that they had here in Q1, which was really good for them. And then along with Q2, marginally better. Well, that was better because this is only 59,000, but this is 357,000 or 3.5 million. So that kind of helped them out there on that one. Okay. So total for that was net loss of, well, a gain of 4.3 million for them. And that equated to 16 cents. So it looks like they had possibly a 9 cents per share quarter for Q4 based on the numbers that we have here. Okay. Let's get into my metrics here really quick, and then I'll show you how that affects it all. So BTC mined was about 182.86 for the quarter. Starting hash rate was 587. They got to 650. That was an increase of 53 petahash. BTC mined was 309 per petahash. For the quarter, cost to mine 1 BTC with everything thrown in was 52,000. But then when you look at cost to mine 1 BTC minus depreciation, some other stuff, that was just 47,633, where before they were at 12.5, even at 4.7 here in Q2. So this seems really high to me. This seems like it's off, and I'll see if I can figure this out, or if you guys know anything. Okay, debt to equity is 0.115, so that's pretty good there. It's really good, actually. Current ratio is also good, 1.88. So that has actually come down a little bit here, but not in a bad spot anyways. So we're good there. Book value is 47 million. I think that they're trading it right now at 43 million. So that's pretty close to it. Price to book ratio is 0.92. Enterprise value is right now at 38.3. And then beta was negative 22 for some reason, where they came out for the year, came in at 13.7. General revenue, this is a revenue 5.6 million for the quarter. General administrative was 1.6, so that came down to 28.28%. So that's a lot better than where it was here in Q3. So that's good there. Okay, the only thing that's bugging me right now is the cost of mine minus depreciation, which should be just cost of mine of the cost of power. That's coming up weird for me, so I'll have to figure that out eventually. If not, we'll just leave it be, and we'll see if we can tackle it some other day. Okay, so that's it. I mean, right now they are looking to me like they are a little bit undervalued based on where they are and then some of the good things that they are doing. So let me know what you guys think of this. I thought it was a pretty good report. The only miner that was positive so far on a per share basis for 2022. We'll see if anybody else can do that, but it doesn't look like it. At least not yet. We may have some of the other smaller miners that might be able to pull this off, but the other guys that have been growing a lot, they're going to have a harder time to being positive. Going into this year, I think that might change though. Okay, so that's it for this one.